The Nasdaq 100 started the week on the back foot after Goldman Sachs downgraded Tesla, citing difficult pricing environment for electric vehicles. This led the Nasdaq 100 underperforming against the S&P 500 and the Dow Jones. Price continued to pull back as called out in our previous video, as 14,840 was lost on Monday, with 14,740 support coming into play. Price held this support level into the close on Monday. Tuesday price rebounded to claw back some of the underperformance from Monday and reclaimed 14,840 in the process after 14,740 held as support for a second day. This was despite Morgan Stanley coming out saying they now expect the Fed to hike rates at its July meeting, following Powell's speech last week. Major banks and institutional investors are starting to reprice risk as they reassess interest rate expectations. This will begin to hit tech stocks more than any other sector, as it's sensitive to changes in rates, which will see the Nasdaq 100 give back some of the outperformance from earlier in the year. In terms of the first half performance, the Nasdaq 100 is up a whopping 37.5%. The best first half performance ever, as shown by this chart. You can see from this chart, 3 heavyweight stocks gaining more than 100% year to date: Nvidia, Tesla and Meta, which has helped contribute to the Nasdaq 100's outperformance. The concentration of a few mega-cap tech stocks is what leaves this outperformance vulnerable for the rest of the year, which is why some of these gains will be given back in the second half of this year, in my view. Back to the daily chart, Wednesday saw price continue to grind higher after retesting 14,840 as support. This was despite Fed Chair Powell warning of further rate hikes, potentially at back-to-back Fed meetings. Price hit this trend line in red, which is from the weekly chart. If I flip to the weekly chart, you can see this trend connects to the November and December 2021 highs. Price held this trend line both on Wednesday and Thursday. However, today we see price pushing through this trend. This was after the Fed's preferred inflation measure, PCE, came in at 3.8% in May, down from 4.3% last month. Further signs that inflation is cooling. It's the lowest reading since April 2021, which is why tech stocks popped on the report. Fed Chair Powell on Wednesday said that he didn't see us getting back to 2% inflation in 2023 or 2024. However, this chart suggests inflation is headed in that direction pretty quickly. Historically, M2 money supply, the amount of money in the economy, tends to lead inflation. You can see M2 money supply is negative as money is being removed from the economy, and that has helped push US CPI lower. If this continues, we could be back at 2% inflation before we know it, and today's PCE report suggests that too. Whilst inflation coming down is good for stocks and the Nasdaq 100, liquidity is what drives the markets. I go back to this chart covering the positive correlation between the Fed balance sheet against the S&P 500. However, notice the recent divergence, where the balance sheet has come off, whilst the S&P 500 has ticked higher. Could this correct itself in the second half of the year, with the S&P 500 following the balance sheet lower? In terms of levels to watch into the close of next week, the blue trend line is key, around 15,115, which we're currently above. If we remain above it, we squeeze towards the recent high of 15,285, followed by 15,580. On the downside, the weekly trend in red, around 15,050, will act as support, whilst further support is at 14,840, which has been the key level for the week and also coincides with the 20-day moving average. Next week we have the ISM Manufacturing and Services PMI, Fed minutes, and the latest jobs report, so that will be the focus. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.